Yes, my people, it's your mentor episode D, and I'm back with another video. So in this video, I want to show you how to get the best entries in the binary options market using reversals, all right? So if you're a binary options trader and you're still struggling to get best entries in the market, then this video is for you, because I'm going to show you how I personally look for entries in the market, from the analysis to how I get my entry points. All right, so if you want to learn how to get the best entries in the binary options market, then make sure you watch this video to the end. And in case you are watching from this channel for the first time and you have not subscribed, then please consider subscribing now and turn on the notification bell, so that anytime I upload videos like this, you will be the first person to be notified. So without wasting time, let's jump into it. So first of all, for you to get the best entries in the binary options market, you need to understand price action. So price action is the key. So if you understand price action, you'll be able to tell the next move of the price. So first of all, we are going to start with analysis. All right. We are going to start with analysis, and for you to analyze the market using price action, you need to study the candlesticks. So these candlesticks helps me understand what the market is doing. All right. At the moment, I can see the price has failed to break this level, and I think it is because of this week here and this week, so that makes it a zone. So they are still struggling to break that zone. They can break it, but before they break that zone, there should be a struggle between buyers and seller a little bit before they break it. So you can see that this is a zone, right? That's a zone. So they are now trying to break it, and I think they've already broken it. So let's analyze this chart for us to know where to place our trade. All right, so I'll use horizontal line to mark these levels, and I'm being guided by the wicks, these wicks. So we should focus with the wicks while marking the zones. All right, so you can see this is another zone, all right, because of these wicks. So like I told you guys, wicks tells us a lot in the market. They tell us when there is a rejection of the price in the market. So if you look at this area here, this is a zone, okay, and the price was unable to break to the downside. Let me pick a pen here. So the price was unable to break to the downside, so there was a reversal to the upside. So this week tells us that there is something that pushed that candle from this level to that level, and it closed here. All right, so it was pushed up to this level, but this week tells us that the candlestick had opened here, went down, then it was then pushed to the upside and closed here. So that means there is a buyer's pressure. So for those who understand the market structure, if you understand the market structure, you know after breakout, there should be a retest, then for the price to continue going up. All right. So after breakout, there should be a retest. So now I'm waiting for a retest. Then I'll be expecting the price to continue going up to form a new higher high. All right. So that's the rule of the market structure. After breakout, there should be a retest. Then we continue with the journey. So right now, this should be your entry. This one should be your entry. This at this zone. Where is that? So this zone, this is your entry level. So anytime the market comes back to retest, we will place an up trade for 2 or 1 minute, but I prefer 2 minutes. So I'll use 2 minutes when the price comes and when the price touches this level. I'll be expecting the price to do what? To pump upside. All right. So before they come back to the test, let me look for another one and analyze as we wait for this one. So let me go to another another market. So here we can see we have a downtrend here, and now I think it was ranging. The market was now ranging after this downtrend. So let me use these weeks to get the main zone. So you can see that's the main zone because of these weeks. Remember, the weeks are guiding me to know the exact level where the price is unable to break, or the reversal point. So you can see we have these weeks here, right? Something is here, and I'm expecting the price to react to that zone when it reaches there. So let me draw another one. We have another one. Yeah. So that's another zone, right? And then we have another one here. Actually, this one is also a zone. You can see something was happening there. Let me show you what was happening. See? Sorry, guys. Let me zoom. Let me zoom. So you can see this week. Sorry, this week. This week. This week. Okay. And this one. So there was a reaction there. You have this reversal, this reversal, this reversal. Yeah, that one. So now the price is at this zone here. So this is what you call retest. So I can place a sell trade. So that was not a good entry. Let me wait for it. I think I'm late. I'm late. Let me wait for it again. I was supposed to place my trade here. Immediately it touched this zone. So let me tell you why I placed a sell trade there. The reason why I placed that trade is because of this breakout here. This breakout, the market had broken this zone to the downside, went to retest, and now it's supposed to continue going down, all right, to the next zone. According to the market structure, after a breakout, there should be a retest, then we continue with the journey, all right? So when it reaches here, we are expecting another breakout to the downside, then another retest here, like that, like that. The market repeats the same pattern over and over. So if you understand the market structure very well, you'll be able to know where and when to place your trade. So it reaches at this zone, I'll be expecting a reversal to the upside for a retest. So I can place an uptrade when it reaches here. All right. That's another entry. All right. This is a good entry. Actually, in a downtrend, we should only focus with the lower highs. All right. With the lower highs, they are more safer than the lower lows. So this one is a lower low. Okay. Let me show you. For those who don't understand the market structure, this is a lower low, lower high. Now it is coming to form a new lower low, then lower high. So this is the safe entry, the lower highs. All right. So you can also place a trade the lower low, but it is not safer than the lower high. So I've placed an up trade at the lower low level, expecting the price to rise and come back to form a lower high. All right. So that is what I'm expecting here right now. So let's wait and see. So the first trade closed in profit. Now we are at the second trade. So I've placed an up trade for 2 minutes, expecting the price to reverse and go up because this is a zone. Okay, I placed that zone because of this wick here. All right, this reversal level here. So like I said, it should go up and form a lower high. So this is a lower low. So let's wait and see how it will end. Let's wait and see how it will end. So if you're watching on this channel for the first time and you have not subscribed, then please consider subscribing and turn on the notification bell so that anytime I upload videos like this, you will be the first person to be notified, right? So here we are remaining with 30 seconds. 30 seconds for this trade to close. 30 seconds for this trade to close. Now we are remaining with 20 seconds. Ten seconds remaining, guys. And boom. So that's another win. So they are coming back to do a retest at this zone here. So that is another entry that we should place a down trade when they reach there, okay? According to the market structure, okay? So you just study the price action and you take advantage of the repeating patterns. The market moves in pattern and it repeats the patterns over and over. So you take advantage of that, all right? So they are still struggling to go up, but let's wait and see if they will touch that zone, but they're supposed to. So let's give them more time and let's see if they will reach at that zone. Then we place a down trade, expecting a turn to the downside, right? Like I told you, this is a downtrend. This is a downtrend forming lower lows, lower highs, lower low. Now it's coming to form a lower high. Then we'll be expecting another lower low, all right, in the next zone. So let's wait for them here and place a down trade, expecting the price to go down. All right, so they are about to reach the zone. Let's get ready. Immediately they touch the zone, we sell. All right, they have touched the zone. I've placed a down trade already. Let's wait and see what will happen, right? Let's wait and see what will happen. So they have already touched that zone and they have formed a lower high. So now we are expecting the price to continue going down to form a lower low. All right. Yeah, that is what I'm expecting. So that's how you get your entries in the market. It's very simple. You get your entries in the market using price action, and you need to understand the market structure. The market structure will guide you, and you'll be able to know where to place your trade and when to place your trade, and also when not to and where not to place your trade. All right. Yes, that's how it works. So let's wait and see. We are remaining with 1 minute for the trade to close. All right. They are still struggling to break that zone. They can also break that zone, but they must struggle first for them to break it. They cannot just break it like that. So you can see they struggled here and here. So now they are managing to break it. Let's see if they will break it completely, because right now we cannot call this a breakout until this candlestick closes outside that zone. Yeah, so we are remaining with 14 seconds for this trade to close, and I can see we are out of the money. Let's wait and see. Few seconds, and boom, we have won that trade as well, but it was so close, but we have won that trade. And as you can see, they have failed to break that zone. So that is not a breakout, all right? It should be called a breakout only when the candlestick body closes outside this zone. But you can see we only have the wick, so that is not a breakout. So that rejection, the price was the price was rejected, and we are supposed to continue going down. All right, yeah. So it should complete that pattern. So what are we expecting now? We are expecting the price to break this zone and come to the next zone. All right, yeah. So that's how you get your entries using price action, and using the market structure to get your entries. So you can see this one failed to retest. So this one, we cannot use it. So I think I should stop there. You can see we took 3 trades and won all of them. And we have made a good profit just by using simple price action, no complications, right? You just analyze the market using price action and you get your entries. So if you want to learn more about price action, you can check out my courses with the link in the description and learn more about price action, market structure, candlestick psychology, and all that, for you to be able to read the charts like a pro. All right, so if you don't have a Binani account, you can create one with the link in the description and get a free 1 million Kenyan shillings for practicing. After that, you can shift to a real account, deposit real money, and start making good profit with this strategy. All right, so thanks a lot for watching this video to the end. Let's meet in the next video.